Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the E-mini futures contract and identify some action areas for the trading week ahead and some price targets to have in mind as we go through the week. So the S&P 500 gained just 0.3% in a narrow range week last week. It was pretty choppy trading action as well. Close on Friday leaves us less than 1% away from all-time highs. Again, Infotech led the sectors last week with a 2.4% gain, while healthcare and utilities led the sector declines. It was a pretty rotational week, really, in terms of sectors, and that comes ahead of this week's FOMC meeting, which is likely to dominate the fundamental narrative for the week ahead. In terms of data for this week, nothing today. Tuesday we get jolts openings. Wednesday, as I say, is going to be the pivotal day. FOMC, Employment Cost Index. We also, after the close, get Oracle earnings. Keep an eye on those. That could add some extra dynamic to potential volatility after the close on Wednesday. Then heading into Thursday, initial jobless claims and no data of note on Friday. So like I say, it's really this week, it's going to be pivotal to see how the markets respond to the FOMC. Obviously, we had Trump pushing back the announcement in terms of the new Fed chair after giving a fairly heavy indication that we would be seeing Hassett take the role. He was doing the rounds, media rounds last week, and certainly supporting a dovish tilt to the policy dynamic, and so we've seen a little bit of a pause there in terms of Trump's enthusiasm for getting that announcement out. And really, I think it's more tactical or potentially strategic on his part, whereby markets are fairly priced now for a rate cut on Wednesday. It's really going to come down to the press conference. Trump can do very little to shift the narrative at this stage. So he's probably, from a tactical perspective, letting Powell play out in terms of his this meeting and his take on the January and March meetings into 2026. Certainly want to be paying very close attention to the dot plot in and around the press conference or post press conference response. If we're seeing either we're getting a more dovish or hawkish read from the market, and how the rate probabilities are shifting into January and March, that's where I think we can see volatility in terms of the market response to the FOMC. And then, like I say, just keep one eye on those Oracle earnings. Oracle has obviously taken on a significant debt burden in terms of its corporate balance sheet, and there had been concerns about that. There had been additional concerns, obviously, with tech valuations as a whole, and we did see certainly some glimmers of bubble concerns coming into the market. So that's going to be an important dynamic as well to keep an eye on as we head into Wednesday. Thinking about market internals now and where we are in terms of the broader market context. If we look at stocks trading over their 20-day moving average, last week was 77. Prior week, sorry, was 77. This week, currently 62%. So seeing a little bit of a pullback there in the shorter term perspective. Medium term, we have the stocks trading over the 50-day moving average, 54% versus 58. So again, a little bit of a pullback there. But stocks are sitting over their 200-day moving average, stays at 60, matching the prior week. So what that tells me is that we're seeing, like I say, more of a rotational trade at this stage. And the short-term froth has been corrected in the markets overall, with all measures still above 50%. That underpins a constructive view on the market from the internals. Realized volatility slightly. Last week's was, as I said, pretty choppy intraday trading conditions, and only one day of above 0.5% realized volatility in the session, the 20-day average being 0.67. So that brings realized volatility down into the 12% area. In terms of the gamma, we remain in a gamma positive posture. The gamma flip level now sitting at 67.80 going into this week. And so what's the read from the gamma profile? Well, that's telling us that we're in a buy the dip, sell the rip regime in terms of market makers. So we can see some stability, although we can continue to expect, from my perspective anyway, pretty choppy, grinding type price action, certainly then as we get through this week and into next week, and that those holiday trading conditions start to kick in with more momentum, I think. So we're likely to see this grinding action continue to play out, unless this week we get a distinct surprise from the FOMC, and which could see volatility kick up and a more significant corrective move unfold. But given the market positioning and the read from the market, that's possible, but less probable, I would say, at this stage. So, in terms of the stance, like I say, neutral to bullish is where we're at over the short to medium term here, and we want to pay very close attention, obviously, to how the market responds on Wednesday to the FOMC. So let's move to the charts and see where we are in terms of the technical setup for the week. So on the weekly time frame, we're sitting above the 5-period volume weighted average price, which 67.47 on the weekly. So whilst we trade above there, the medium term structure remains supportive to the upside. In terms of the daily volume weighted average price is also bullish. 68.61 is the flip point there. So whilst we're trading above there, like I say, momentum is maintained to the upside with that potential for choppy intraday price action. So you want to pick your spots in terms of entry points to play this from the long side. From the broader perspective, we are tracking on the daily this 5-wave sequence now. So versus our lows seen into that pullback the end of November. Whilst we hold that 65.20 low, we have an equality 5 equals 1 minimum upside objective just above 7,200. You'll note that it coincides here with the projected trend channel resistance as well, so keep that in mind. So that's where where we're headed. Certainly, that doesn't mean we're heading there this week or next, but that's the upside target over the medium term perspective that we want to pay attention to. And at this stage, only closes back through the trend line support through the 66.70s would suggest that we're going to see another meaningful leg to the downside. So whilst we maintain that structural support on the daily time frame, we're looking to play this market certainly from the long side is the game plan at the moment. So let's move into the intraday charts and see where our setups are for the week ahead, or the probable price paths that I'm going to be tracking anyway. So from my perspective, I'm using the 68.40, 68.30 as my bull bear zone. So any moves back into that area, I'm watching for bullish reversal patterns to engage on the long side. Ultimately, then we're looking to take out the current highs through the 69.04 level, which is our first point of resistance as we start the week. And then we'll be looking for a test of the 69.30s, 69.40s. Any pullbacks then should find support here back into those 68.90s for an extension up into our weekly projected range resistance for the week ahead, which comes in at 69.78. So that's ultimately the target for the week, is going to be a break through all-time highs and on to test into weekly projected range resistance. The alternative scenario is we maintain upside momentum and we get a grinding move up into that 69.30, 69.40. I would then be watching for pullbacks back into, like I say, that 68.90, 68 area to act as support. Again, then same upside targets are going to be in mind into that weekly projected range resistance, 69.78. Alternative scenario is we pull back, we don't hold the weekly bull bear zone, so we get a momentum move to the downside. Then I'd be looking for a test of weekly projected range support, which comes in at 67.78. We also have this high volume area on the volume profile. So I would look for bullish reversal patterns in this area to engage on the long side. We would look then for a retest of the weekly bull bear zone from below. If we don't find supply there, we look for the same upside objectives heading into the back end of the week. Alternatively, if sellers then decide to step in at the bull bear zone and defend it from above, then we're going to look for a move down into that pivotal 67.40s, which I referenced in last week's updates. And that's going to be extremely key battle zone, I think, if we're to maintain momentum to the upside heading into the close of the year. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.